So we can see that the momentum is slowing down, and then boom, that is an indication that the momentum is high and a sell position right here and to make money. Understanding Japanese candlesticks is the core of day trading. They provide traders with a lot of valuable information to make much more informed decisions. Candlesticks visually represents the size of the price moves with different colors. Traders use the candlesticks to make trading decisions based on regularly occurring patterns that help forecast the short-term direction of the price. Today, I will teach you everything that you need to know about candlesticks. After watching this masterclass, you will go from knowing nothing to being able to read candlesticks like a pro and also to make profitable price predictions. We are starting this new year by giving people a chance to start learning day trading for an insanely low price directly from me. This is for people who are seriously thinking about starting their year differently by investing into themselves, investing into understanding day trading, investing and all of these things. So if you guys are interested in that, there is a link in the description. And without further ado, let's get right into it. Welcome to Mastering Candlesticks Masterclass. So today we'll talk about everything that you need to know about day trading candlesticks. So in day trading, it doesn't matter whether you are day trading stocks or crypto or forex, majority of traders use Japanese candlesticks as a type of chart. So it is really common. Almost everybody uses Japanese candlesticks because they provide you with a lot of information. And in my opinion, the Japanese candlesticks is a great type of chart to use. It is much better than other types of charts out there. So if you're serious about day trading, you need to understand candlesticks as it is crucial to your trading performance. So you probably have heard about thousands of different candlestick patterns or candlestick cheat sheets or whatever you want to call it, and a lot of traders are saying that you only need this one cheat sheet or these specific types of candlestick patterns, and you can just basically see the chart, find these patterns and trade according with it, and then you will be successful. You will make millions of dollars and so on. And that's actually bullshit. First of all, the candlestick patterns are legit, but there is no such thing as a cheat sheet or whatever traders call it. Basically, you need to look for candlestick patterns, but it's not the only thing that you need to know. You need to understand the momentum. You need to understand the anatomy of candlesticks. Basically, the correct way to day trade with candlesticks is to actually learn how to read them, how to understand them, how to understand momentum of the candlesticks. And then when you understand the momentum of the candlesticks, you can make much more informed decisions, and they are much better than just reading through some random cheat sheet and or some random candlestick pattern and just trading according with it. So today my goal is to teach you how to properly read and understand candlesticks, so you do not need to rely on any cheat sheet or candlestick pattern or one particular candlestick pattern that will magically make you rich, because that's just nonsense. So if you want to read candlesticks as a professional, the first thing that you need to know is the anatomy of a candlestick. Here you can see a simple bullish candle, and the first thing that you need to understand is that a candle has its body. So it doesn't matter whether it is a bearish candle or a bullish candle. Candles has their bodies and also they have their wicks. And it's really simple. If it is a bullish candle, that means that a bullish candle will open from the bottom and move to the top. And if it is a bearish candle, it will open at the top of its body and then eventually move downwards. And then once you understand that, so here this candle usually opens right here, and this is where the price opens, so it's called open price. And then eventually the price fluctuates, so depending on your time frame, it depends how much time this candle is alive, but basically it opens right here, and this is the low of the price. So when the candlestick fluctuates, it usually goes up and down like this. You probably seen it when you were trading. So if a candle goes right here but it doesn't close here, it is pushed upwards, it goes upwards, but it leaves a wick. And from this opening price, you can look where the candle will close. So maybe it will fluctuate, and when the candle, the body of the candle, the price itself goes to this particular point right here, but for example something happens and the price is pushed downwards and it eventually closes right here. So here we have an open, here we have a close of the price. Because it is a bullish candle, the price moved upwards, and this is the lowest point of the lifetime of a candle. So the price was at some point, it was right here, but the price didn't close here, so it was pushed upwards, and then at some point of its life cycle, it was right here at the top, but again something happened and the price was pushed downwards and it eventually closed right here. So basically here we have an open of the price and here we have a close, but during the life cycle of a candle, it was at the highest point right here and it was at the lowest point right here. Then when you understand the anatomy of a candlestick, it is really important to understand momentum of candles. So first of all, we have a very bullish example of the candle. So again, we have bullish and bearish candles. The green candles are bullish and usually the red candles are bearish. In this case, these principles apply to both bullish and bearish candles, but in this case we are using bullish candles as the example. So when a candle has a long body like this and it has small wicks, that is an indication that the momentum is high, it's very bullish, and the price is strongly going upwards. Then we have neutral bullish. Basically this when the candle has long wicks and a small body. So when it is very bullish, in this case we have a long body and small wicks, and when it is neutral, when the price is indecisive, we actually have long wicks and a small body. So this is neutral. That means that the price is really indecisive whether to go upwards or whether to go downwards. It's being pushed from the top, it's being pushed from the bottom, and hence we have this small body right here. And when the price is moving upwards, we have an uptrend, so we have green candles, but this particular green candle opens right here, but it closes right here. So we have a small body and we have a long wick from the top. That means that it is least bullish and that this bullish candle is very weak, because during this life cycle of this candle, it went to this point right here, but the seller's pressure was so strong that it actually pushed the price to this point right here, and the price, this bullish candle, actually managed to move only from here to here, but eventually it was right here, but it was pushed downwards. So that means that the seller's pressure is high and we have a least bullish momentum. And same goes for the bearish candles. If we have a long body bearish candles, that means that the momentum is strongly bearish. And if we have a small body long wicks, we have neutral bearish, and also we have least bearish. So if the candle is moving downwards, but it doesn't, the buyer's pressure is also very strong, we would have a small body and a long wick from the bottom. So first of all, what you need to understand is that a candlestick life cycle depends on your time frame. So in this case, we are on 4-hour time frame, and that means that each candle took 4 hours to complete. If we would go to, for example, 1-hour time frame, that would mean that every single candle took 1 hour to complete. So in this case, we are on 4-hour time frame, and that means that, for example, here we know that, for example, particularly during this 4 hours, the price went upwards, and we not only know the direction of the price, but also how much the price has moved during a particular time frame. So in this case, every candle took 4 hours to complete. So now we know how to read a candlestick, so let's start doing that. First of all, when you want to read candlesticks, you need to understand the anatomy that we just have learned. And for example, let's take this candlestick as a starting point. Again, remember that if it is a bearish candle, the price opens right here, and then it moved downwards. Then the price opened right here and moved downwards. But during the life cycle of this particular candle, the lowest points that the price has been is over here. But then it was pushed upwards, it closed, and then another candlestick opened. And again, the candlestick went downwards by a little bit. And remember, this is a least bearish candle because, for example, here we have a very small body and the long wick coming from the bottom. And because it is a bearish candle, that means that the buyer's pressure is building up and it is really strong. And look what happens afterwards. We instantly get a green candle, which during its lifetime, it opened right here. And during this 4-hour life cycle, the price was right here. But eventually it didn't close right here. It was pushed downwards. It closed right here. And then we got ourselves another candle, which opened right here. And as you can see, it was strongly pushed upwards and it had huge momentum. And look, the price moved by this much to the top. So now you understand the momentum. For example, over here we had the least bearish candle, and that means that the price is basically will soon reverse. But remember, a very important thing is that when you read the candlesticks, for example, here we have a least bearish candle, that doesn't mean that the price will for 100% reverse. It only means that the probabilities are more probabilities is there that the price will reverse. So it doesn't mean that you see that this candlestick is least bearish and that means that now the price will definitely move upwards and you open a trade. We'll talk about later how to actually trade with candlesticks, how you can combine it with different tools, but in this case just know that it doesn't 100% guarantee that the price will reverse, but it only shows you that the probabilities are on your side. So now let's see how this particular low happened. So first of all, as you can see, we can start reading the chart from here. The price, let's take this candlestick as a starting point, and the price opened right here. It moved upwards. Then the price moved with momentum, with bullish candles. And here, as you can see, the momentum has shifted. We see long wicks from the top, and that means that now seller's pressure is building up right here. And now the price is starting to move downwards. So for example, right here, this candlestick opened right here, closed here. Then this candle opened right here. Because it is a bearish candle, it moved downwards. And then we have another downwards candle. And remember that, for example, right here, we have an indecision candle because we have long wicks from the top and long wicks from the bottom and a small body. That means that the price can't really decide in which direction it will go, because it has strong bullish pressure, but it also has strong bearish pressure. But then the price moved downwards by a few bearish candles. And then, as you can see over here, we had indecision, and then we had a candlestick which is least bearish, and that is an indication that now most likely the price is reversing and the reversal is coming. And boom, as you can see right here, the price moves upwards with a strong momentum candle, and then it continues moving upwards. And here I have a great example of where the power of understanding the momentum of the price and the candlesticks comes in. So over here we can see that we have a level. It is a resistance level because the price is coming upwards and then it is being pushed downwards. And over here, when the price is at the resistance, you are never sure whether this resistance will hold, because the price may go upwards, it may break the resistance, and it may turn support or whatever. So you cannot really open a position, for example, into the sell right here, because you're never sure whether this resistance level will be strong enough to overturn the price. But this is where the momentum of the price and the candlesticks come in. So if you know how to read the momentum of the candlesticks, you can see clear indication that over here, first of all, we had very strong momentum candles. The price was very bullish right here, and then boom, look at this. We have an indecision candle. We have long wicks from the top, long wicks from the bottom. Again, another indecision candles, and this is a least bearish candle because we have long wick from the top. So that means that the price is really strongly being pushed downwards, and as you can see, that is exactly what is happening. So for example, right here, the price moved upwards, and this candle right here is showing indecision. We have a long wick from the top, so it's also can be called a least bearish candle. That means that we have strong pressure coming from the top. So that means we have a strong seller's pressure pushing the price to the bottom. So again, we have a great indication that this particular resistance point is holding really well, because we can see that the momentum is shifting. So over here we have great indications, and again we have 1, 2, and we have the third candle, which is indicating us the same thing. We have an indecision candle that over here the price will usually reverse, and as you can see, it exactly what happened. So here we could have potentially opened a sell position, and as you can see, we could have made money just plainly reading the candlesticks at a resistance level. Now that we understand the anatomy of a candlestick, we understand the momentum of the candlesticks. Basically, we can see where the price is losing momentum, where the price has a strong momentum, and we can read momentum where it is next to support or resistance levels. So it gives us more indications of where the price could potentially reverse, where the trend will continue, and all of these useful things. And now we need to talk about different types of candles. So first of all, we have a momentum candle. So a candle that has very long body and almost no resistance from the top. So in this case, we have very bullish momentum candle because the price opened right here and it moved, and the longer the body, the stronger the momentum is. And basically, if we have almost no resistance at the top, we will have no or very small wicks coming from the top. That means that the price is strongly moving upwards without any resistance. So as you can see right here, it indicates strength. We have a strong close without resistance. So really important to understand that if we have a very strong momentum candles without any wicks at the top, that means that we have basically strong bullish pressure. That means that you should not be selling in these types of market conditions, because think about that, we have very strong candles, momentum candles going upwards, and if you start selling, for example right here, that would be really stupid from your side, because then you would be going against the momentum of the price, and just most likely the price will continue going upwards, because these types of candles indicates that we have strong pressure, the bullish pressure, and we have almost no seller's pressure. So that means that probably you will be stopped out if you would be opening sell positions in these types of circumstances. So really important to understand these momentum candles, and same goes if we have strong bearish momentum candles. If we have a very long body bearish candle without any wicks from the bottom, that means that we have no resistance from the buyers, and that means that you probably shouldn't be buying in these types of market conditions. You should rather be selling and going with the momentum of the price. So remember, always go with the momentum of the price. So these momentum candles indicate clear direction of the price, so it's very easy to read. and it shows which sides control momentum. So this is total control of particular side. So in this case we have total bullish control from the buyers and no resistance from the bearish side. Then we have indecision candles, again, which we talked about a little bit. So here we have candles that has long wicks from the bottom and the top and small body. So again, this just means that, for example, imagine the life cycle of this candle, and basically it is being pushed from the bottom, from the buyers, then it is being pushed from the top, from the sellers, and then from the bottom, from the top. And that's why we have long wicks and we have small bodies, because the price is just indecisive, because we have strong buyers pressure and we have strong sellers pressure. So it shows a weakness. The momentum is slowing down. So imagine we were going very bullish with strong momentum candles, and then we see an indecision candle. That means that that momentum is almost gone. We can see a weakness of momentum. It is slowing down, and it means that probably eventually we'll get a reversal, because now the bullish side has lost its momentum. And basically it is an indecision and no clear direction where the market will go. So in this case, this is really important when the price shows indecision candles, that it is probably a great opportunity to look for opening positions into the opposite side. So remember never to open positions against the momentum, but when there is a weakness, when we have a lot of indecision candles, that probably means that the price is reversing and it will eventually go into the other side. And the last types of candles that you need to understand in order to basically trade more profitably and to make more informed decisions, make better decisions, and stop being stopped out so much by the price, is that you need to understand the rejection candle again. So it shows a strong weakness. Bears or bulls is not able to close the price in the moving direction. So again, in this case we have a bullish weak candle. So imagine again, this is the life cycle of the candle, and the buyers are trying to push the price upwards, and this candle is trying to go upwards to, for example, over here, but then boom, a lot of sellers come into the market, and then it is pushed strongly downwards and it closes right here, because the price was just unable to go right here. So it shows a failure. So price attempts to break or reverse basically some sort of a level, or just to break the pressure from the sellers, but it is unable. And these types of candles again strongly indicates that now probably the price will reverse. So now let's move on again to our charts and let's see example of these different candles. So now let's see these different types of candles in action. So again, we are on the same chart, we are on the gold chart, we are on 4-hour time frame. Again, that means that each candle took 4 hours to complete. And let's just start with simple examples. So first of all, look, we had a strong momentum from the price. Look at the size of this candle. It has a long body, a long bullish body. So that means that we had very strong momentum upwards. And here we have a level, a resistance level. I have marked it as a horizontal line, so we can see this level right here. And for example, you are considering whether to enter a short position at this particular case. So here we can see that, for example, we had a strong momentum candle, and then look what is going on right here. We have a least bearish candle. So that means, for example, here, look at this wick right here. We had the candle which was right here, and then boom, it was pushed downwards by the sellers. So that means that now the momentum is slowly shifting. And just look at these candles. All of these candles in general look indecisiveness. Then look at this particular candle right here. And it is not a coincidence that, for example, here we are at a horizontal line, a resistance level, and over here candlesticks are telling us that it is indecisive and that it doesn't know where to go, and that most likely right now it will reverse and look what happens right here. We can see that slowly but surely the price is reversing from this level right here, and it gives us a great opportunity to open a sell position right here and to make money. So same goes if we look at these different candles. All of these candles shows either basically very bearish candles, or just candles that in general shows indecisiveness, and they're also on the same level, just below our resistance level, and that simply means that over here the price will probably reverse and that you can open a sell position. So as you can see right here, we read from these candles, from the momentum of the candles, and we used this level right here to correctly indicate that over here the price will reverse and that we can make money over here. So that means that we are never entering sell positions right here when the momentum is strongly going upwards. So again, what I've told you, never open sell positions when we have strong momentum bullish candles, because look what happens. And that's actually a mistake by a lot of traders, but rather look for indecision candles, look for levels to combine it with, and then you can make much better decisions. And we have a lot of these examples. We can just move on further. So again, we have very strong bearish momentum candles. So the price opens right here, moves to here, then opens here, moves to here, and look what a coincidence. Over here we have a bullish level. So we have a support level that will probably turn the price around, but we do not know that yet. But here, if we read the candles, again, look, we had strong momentum, but over here we have all of these candles, first of all, at the same level. So they are just above the support level, and look at the amount of indecision in the price. We have so long wicks from the top, from the bottom, and that means that over here the momentum is shifting, because we have probably a lot of buyers coming in and they are slowly overtaking the market. And as you can see, we had strong momentum over here, and then the price is being reversed. We have this doji right here, again indecisive candles, and now we can open a buy position and make money. So by now probably you understand why we do not need all of these cheat sheets and look for these different kind of magical patterns, but just in general we can look at the momentum of the price, we can read the candles, we can combine it with different tools, and then we will have a great result like this. And just to show you even further how does it work, again, at any turning point of the price we can see some sort of momentum shift right here, then over here and over here, and then again look, we have a level over here, same situation, boom, we have a lot of indecision candles, we have long wicks coming from the top to bottom. That means that the momentum is changing, and then also we can see over here that same situation is happening over and over again in the markets. And this is why these Japanese candlesticks are so useful, because they provide you with a lot of information that you can use. And as you can see, at any point, at any turning point of the price, you can see some sort of, and you can read from the candles some sort of momentum shift. And just in general, if you understand the candles, you can make much more informed decisions, as you can see right here. So hopefully by now you already understand how to read candlesticks, what is the anatomy of a candlestick, what information does it provide you. So hopefully you guys now understand that it is really useful for a day trader to understand these Japanese candlesticks, because they provide you with a lot of valuable information that you can use to open positions, to buy and sell, and just to make money in the markets in general. And the last part that we need to talk about today in this masterclass of candlesticks is that you need to combine it with other tools. So remember, I have told you that never use candlesticks alone. So again, if you have one indecision candle that does, for example, the price is going upwards, and you have one random indecision candle, that doesn't mean that you should open sell position, because that doesn't mean that the price will reverse. It only means that the momentum is slowing down. but that doesn't mean that it will reverse. It may continue going downwards. So it's really important not to start taking dumb trades just using, for example, one indecision candle or one least bullish or bearish candle, but in general combine it with other tools. And the first tool, the strongest tool that you can combine it with, is key market level. So again, I have definitely showed you now a lot of examples on the charts how everything works. So basically, for example, in this case, again, we have strong momentum coming from the top, from the bottom. So we have bullish trend going, and then you have your key market level or your psychological level or whatever levels you are using. And then, as you can see, we have an indecision candle. We have a candle that has small body compared to its wick. So we have long wick from the top, long wick from the bottom. The wick from the top is even longer than the wick from the bottom, and that means that not only here we have an indecision, but the seller's pressure is now stronger than the bullish pressure, and that means that the price is reversing. And now not only you have a level, but you have a candle that is telling you that here the price will reverse and you can open a sell position. Same goes with Fibonacci. You can use it with Fibonacci tool. So again, if you use the Fibonacci, you are looking when the retracement will end to open, in this case again, sell position. Again, candles will also help you with correctly identifying, for example, in this case, when the reversal will come and when the retracement will end. So again, if you look right here, we had a strong bullish candle, and over here it was reversed right here. Now we have a bearish candles right here, and that is just an indication that over here you can again open a sell position. You can use it with trend lines. Again, it works well with a trend line. You may see a lot of indecision near trend lines, or for example, if the trend is going bullish and you mark your trend line, and if the price is retracing a little bit, it touches your trend line, maybe you can see a least bearish candle. That means that the price will soon reverse into again going with the trend according with your trend line. So again, really great tool to use. And with this tool right here, we'll finish this episode here. So hopefully you guys enjoyed it. Tai va šitą iškirpam dalį nuo trendline kažkur, and you can use it with a lot of other different tools. Thank you guys for tuning in. Hopefully you guys enjoyed this episode. Hopefully you guys learned a lot. We do a lot of these in the channel, so if you're interested in that, you can subscribe and watch my other videos. So hopefully you guys enjoyed it, and see you in the next one.